TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 32, NASDAQ up 23, S&Ps are up 4, gold contracts down $27, trading at $1,266 an ounce. You get silver off 52 cents at $17 an ounce. Platinum's down 29 at $1,050 an ounce. Copper's off 5 pennies at $2.10 a pound. Light sweet crude off 71 cents, $43.94 a barrel. Bonds, we have the 10-year note up 6 ticks, 130.23. 30-year bond up 7 ticks, 165.08. Both the 10 and the 30, folks, are going to try to go test the highs of Friday. Friday, they failed on volume, on price, as they were going into the downdraft that had been created out there last month. King dollar up 257 ticks, 94.14. You have the euro down 14 at $1.13, and the yen is up a penny and a half at 108. If we go over and we take a look at the S&P, this is what you're looking at out here. So, from the highs that was generated out here on the 24th of April, what you had, the 20th of April rather, we've had two separate small trends down with volume. Friday, what do? You reject lower price, you have lighter volume. I suspect what we're going to see right now, we're at 206.30. This thing can bounce somewhere up to the 207.54 area. You'll see you'll see a contraction of volume as we go to higher price. If that's what we get, guess what? That keeps the downtrend in place. NDX 100, same setup on the Qs. What you have with the Qs come off the high on the 19th of April. That high was $111. We trade down to 104 Friday. Rejects lower price, has lighter volume. Now we're going to bounce, and we'll see how we get up into the 107 area, the 106.69 area. I suspect the same type of setup that you'll bounce, and you'll bounce with lighter volume. The first leg down was on the 22nd of April, had volume. Next leg down on the 29th of April, had volume. And I suspect we're going to bounce with lighter volume. Gold contract. What do we have at gold? They're hammering gold out here this morning. Gold's down $27. You have 138,000 contracts traded. Bottom line, gold's going to need more volume in order to crack. The number to keep your eye on out here today is 1267. The 1267 is the 29th of April. That's when we went from 1267 to 1299. We did 274,000 contracts. It's going to be hard to break that down. So I suspect this is what the test is, and we'll see whether it holds at that area. Silver, what do we have with the silver contract? Same setup with silver, highly volatile. What has happened with silver is this, though. Silver is actually getting stronger than gold. The actual physical metal is trading stronger than gold. I suspect what we have out here today, you got down to $16.96. You're coming into 72,000 contracts. We're done 34 thus far. The number to keep your eye on here on silver is $17.18. Right now, you're below that number. If we can close above that number, what does that set up? That sets up higher prices very quickly. King dollar. Let's go take a look at King dollar, because the movement that we do have inside the metal market, inside the commodities market in general, is pretty extensive, meaning on the way down. King dollar, guess what? An anemic bounce on very light volume. What we have out here today is this. You have 9,700 contracts traded. You're going into 30,000 contracts, 32,000. Bottom line, I suspect we're at 94.14. This thing can bounce up to somewhere 94.20. Yeah, well, 94.50. 94.50 is game on this deal. That's a dead cat bounce. Thus far, the volume is contracting each and every day. And what does that set up? That sets up lower prices coming at us. When we traded to 91.88 last week, that's a high volume spike low that will get tested. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here at 10 o'clock tomorrow morning.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.